The opinions voiced in this program are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, financial advisor, or tax advisor prior to investing. Got a question? Got a comment? Get Straight Talk from Mike Robertson right now at 713-785-1817.
Okay, for the first half of the show, we've been talking about some of the seriousness that's going on in the world and what's going on in Greece and how it may impact your portfolio. And one of the there's a group of people out there that believes that one of the answers to the danger in portfolios right now is gold. And I've got with me today someone who is a big believer, I think, in the metal. I've got with me Andy Hoffman, who goes by the moniker Ranting Andy. He's a CFA and he's a marketing director at Miles Franklin. Before that, he was a buy-side, sell-side analyst, most notably oilfield service analyst at Solomon Smith Barney. Andy, welcome to the show.
Thanks for having me, Mike.
Hey, I got to ask you, why Ranting Andy? I mean, where did that moniker come from?
Well, I think if you ask me a few questions, you'll get it. Look, I have a lot of passion. I'm an edgy New Yorker. I've also been in the precious metals market for 10 years, which is a war in and of itself. And my job is to protect people against all the negative forces out there trying to take their money. And it comes out in my writing, and it'll come out if you ask me the right question too.
Well, maybe I should have had you send me the questions now. And also, the people can follow you. If I get this right, it's Miles Franklin Blog. Is that how they follow you?
Well, milesfranklin.com. Milesfranklin.com. I write 5 days a week for free. So.
Okay, milesfranklin.com, folks. Ranting Andy, and I'll remind you that again. All right. Well, we'll just start with the obvious. What do you think of gold here? It hasn't quite performed the way some people would have thought. In fact, before you answer that question, let me tell you kind of where I'm coming from, because I noticed yesterday. Chief commodity global strategist Colin Fenton over at J.P. Morgan predicted that gold would reach $2,000 a troy ounce within the next 2 years. Of course, now he was also the same guy that predicted it would reach $2,500 by the end of last year, and of course it peaked out at $1,924. So what do you think of gold now that it's backed off to the 1600s?
Well, first off, I'd say, why are we listening to anything that J.P. Morgan has to say? I mean, J.P. Morgan is they've been one of the primary reasons for the demise of this nation. And, look, Jamie Dimon was on Capitol Hill yesterday with all the doting senators that are all on his payroll. It's a fact. Just asking them layup questions when they should be asking, why do you have $500 trillion of the derivatives exposure, and why do you not lose money ever in trading anymore the way you used to? But aside from that, look, gold and silver, we've talked about this when I was on in August. They are the enemy of the state. They've been held down for many, many years. And still, you're saying, why have they not acted the way they should? Well, for all of the hype about how badly they've acted, gold was up last year. Gold is up this year. It's up more than the Dow. It's been up for 12 years in a row, and it will keep going up despite the efforts to keep it down.
Now, It seems to me like one of the issues, though, with gold, and I'm not talking about a pro or con issue with it, but it seems to have coupled itself more with the markets than I would have thought it would have. I've been around 37 years, and it used to be that if the markets were going down, you could almost guarantee that gold was going up, or vice versa. Lately, it doesn't seem to be doing that. It seems to be moving. Market goes down, it goes down. Market goes up, it goes up. Why is that?
Well, the thing is that this is a extremely powerful propaganda campaign to make you believe that. For instance, for years you've been told that every time the dollar goes up, that means gold goes down. The fact is the dollar is traded in a 5 or 10 point tight range around the 80 level for the past 7 years, and gold has gone up fivefold while the dollar has done pretty much nothing. And the same goes for this propaganda that it only goes up with the market. I mean, the Dow, in absolute terms, is up only about 2 or 3% in the last decade, while gold is up from $200, it got up to $1,900. And the other day, for instance, last Friday, gold was up $58 and the Dow was down 275 points. I have a chart right here I put in my last piece showing how gold has performed on the worst Dow days during the last 5 years. So I have about 20 days, the worst 20 days, where the Dow on average went down about 4%. On those days, gold went up on average about 2%. And as you saw last week, it went up 4% while the Dow went down 3%. So, again, there are a lot of algorithms out there that are trying to tie gold to certain things in the short term. Oh, oil moves, or the Dow moves, or the dollar versus the euro moves. But the fact is, gold has been the best hedge against all the negative things that have happened over the past decade.
Okay, so what you're saying is that we really do get some serious, like, for instance, serious repercussions from the situation in Greece and Spain. Gold really is going to be a good place to be because it's going to respond positively in the face of probably a real negative onslaught under the markets. Is that correct?
Well, look, it has over time, and that's the beauty of the campaign to denigrate gold. Is because, for instance, what you'll see is last week, Bernanke's on Capitol Hill speaking. Everyone knows that Bernanke doesn't say anything. No Fed chairman has ever said anything about monetary policy on Capitol Hill. So, of course, the second that he talks, bam, gold goes down $40. The same thing happened back in February when he spoke. He didn't say anything. He didn't say anything incremental. And, that's what they would like to happen. That what they would like to happen is the Greek elections happen and gold falls on Monday and the media writes that gold is not doing its job. But the fact is, it really doesn't matter what happens in Greece. I mean, yes, if Syriza wins and the party leader, Tsipras, actually decides, maybe we should get out of the euro, I mean, that is pretty catastrophic for the markets in general. But if not, I mean, we'll just go on the same thing. Gold will continue to churn its way up despite all their best efforts. And the global financial system will struggle in the same manner that it has for years. It'll get worse and worse. And, so either things happen slow if New Democracy wins, or they happen a lot faster if Syriza wins. And either way, gold is going to be the benefactor.
Okay. All right, so we got Colin Fenton's idea of where gold's supposed to go. What are your thoughts? What's your prediction about gold? Do you have one?
Sure, I got plenty of predictions. But look,
okay, take away.
When I talk about gold, I'm not a stock analyst anymore. I'm no longer on Wall Street. I work in the bullion business. My prediction on gold is that it will balance with all the money that's printed over time. I mean, if you do the math of what's overtly printed, not all the stuff that's secretly printed, like the $16 trillion of loans we just found out that the Fed gave out in 2008, but just the money that's out there that the government say they've printed, if you're going to balance the amount of ounces of gold that are supposedly out there too, then it should be $15,000 to $20,000 an ounce. And I mean now in today's dollars. That's what it should be. So you can pick a number of where it's going to go. That's what my number is based on the math. And, of course, the more dollars they print, the more likely that number goes higher. But, it's really going to be, it's a battle of perception. The goal is to make the public believe that the current system of fiat dollars works and that real money, which is the only system that's ever worked throughout history, doesn't. Real money will win. It's just a matter of will it win next week, next month, next year, or in 2 years. It's going to happen.
Now, is there enough of that real money out there to support the economies of the world?
Absolutely, just not at the current prices. And that's again, I'm going to keep using the word propaganda when people say there's not enough of it. I mean, if you look at the definition of money, I mean, what it is that makes money worth something, there's a scarcity value. Now, at $1,700 gold, of course, there's not enough out there. But at $50,000 gold, sure there is. I mean, what does it matter how much there is? It matters what it's worth. You can always break it up into pieces, and ultimately they'd have some kind of system backing it up so that people understand how much gold is in the system compared to how much money.
What do you think of silver? That they call it the poor man's gold, but a lot of people, frankly, can't afford gold even at these prices, to say the least, higher prices. What do you think of silver? Because you've got different factors that involve silver. It's much more of an industrial metal than gold is. Do you see the same rise in the silver market as you do in gold?
Yeah, I think silver is far more undervalued than gold. The historical gold to silver ratio is closer to 15 to 1. Right now it's closer to 50 to 1, except the difference is now almost all the silver's gone. There's less than 1 billion ounces out there above ground, and only so much of it is available for investment because, as you say, in time, it's also become it's become actually the second most widely used commodity on Earth after crude oil, meaning by number of uses. So not only is it monetary, and if you look at how it trades, it literally has a 100% correlation with gold. So, again, you've seen plenty of days, copper falls and they hit silver and they say, oh, it's an industrial metal. But the fact is, if you look at long periods of time, silver has about 100% directional correlation to gold and has almost no correlation to copper. So, yes, the fact that it's an industrial metal only makes it worth that much more because it's consuming it, unlike gold, which doesn't get consumed. And of course, it is the poor man's money. It has a monetary history as long as, or probably longer than gold.
Do you expect a move in gold next week based upon because regardless of how the Greek elections turned out, Greece is still in trouble, and it truly is in default. We all know that Spain's about to tank. I mean, their unemployment is 25%. All the things going on in Europe, there's almost no hope that we won't see some move in the precious metal anyway, right?
In a free market, it should move today. It should move on Monday, no matter what happens in Greece. You are absolutely right. And again, I was just writing my piece for tomorrow, talking about how the powers that be are almost trying to use this Greek election to get people off the real problem, which is that everything's bankrupt. They're trying to make you think, well, if New Democracy wins, it's going to be okay. But the fact is, the New Democracy has been there when all these bailouts have been in place that haven't worked. Heck, Spain got theoretically bailed out on Friday on Saturday, and markets tanked on Monday. And yesterday, Spanish bonds, Spanish sovereign 10-year bonds went up 20 basis points in one day to a new high. So yes, everything is bankrupt, and the matter is, the powers that be do not want gold to do what it should do. I don't know if it will rise on Monday, if it will rise Tuesday, if it will rise next week, but I am extremely, extremely confident that it will be 12 years in a row of gold being up, and it will be 13 years and 14 years as well. The only thing that could stop gold's rise would be a final realization by the markets that we need to be on a gold standard. Of course, the gold price would be much higher at that point, but at that point we can address reality and start to link real money to the system so that these bankrupt nations and banks can't keep borrowing money and printing money and causing inflation.
Why do you think the powers that be Hello? Because I don't understand. I don't understand why they would do that. Why they would manipulate the market. Oh, dang.
We got cut off, Mike.
Yeah, we did get cut off. Sorry. Why did the powers that be manipulate the market? Why do you think they're so against gold?
Well, it's not so much that they're against gold. What they want is just to maintain the status quo. Because, again, when central banks can print money out of thin air, and, of course, the central banks are controlled by the private banks, they're the shareholders of the Federal Reserve, then they can, give money to the campaign contributions to the politicians and have a nice little fiefdom where they have unlimited ability to print money and give it out to wherever they want. It works very well until you have the inflation, and then people get upset, and then things happen like in Greece where they vote out all the incumbents. It's really that simple. If you look at who the top campaign contributions were to, for instance, to George Bush in 2004, he had all the Wall Street money. In 2008, Obama had all the money. 2012, all those guys all the Wall Street money that went to Obama, it's all in Mitt Romney's corner. So they have a nice little tit for tat. J.P. Morgan, Jamie Dimon goes on to Capitol Hill the other day, and it's a love fest, even though he should be there, defending why he destroyed the world. And that's why they want to keep things going, because real money prevents politicians from having power, and it certainly prevents banks from having power.
Okay, well, that makes sense. Well, now one question I like to ask everybody that's on, what's the one thing that keeps you up at night, that you worry about, either the economy, portfolios, whatever? what is the one economic event or economic situation that you really personally worry about, that you think, well, I don't know if we have an answer for this?
Well, if you're talking about, meaning as a gold holder, nothing, because there's nothing that's going to turn around the demand for gold. There's nothing that's going to fix the monetary system other than that we change to a new system. But if you say in general, what worries me? Everything. I mean, that's why I'm ranting, Andy. I truly believe that this system, which was based on fiat currency back from 1971, is doomed. I mean, it's pretty clear if you look around what has happened in its face, and it's only getting worse. So I worry every single day that we're going to have hyperinflation, that we're going to have unemployment, social unrest, draconian governments like we've seen in some of the other inflationary areas of the world, and that's why I talk to people about protecting themselves.
So you're worried about everything. Well, that would mean that a gold would be a good investment then.
That's right.
What is your advice? We've got like a minute to go. What is your advice for the investors out there?
My advice is, again, I mean, precious metals is only one part of what you do, and I'm talking about physical precious metals, okay? Not paper, not GLD, not mining stocks. But it's not just about precious metals. It's about thinking, what will happen if we have hyperinflation? What will happen if we have social unrest and 25 or 30% unemployment? What can I do to prevent myself from being caught up in all the things that everyone else is? And that would be making sure you have supplies of food, of energy, of life necessities, of precious metals, and protection.
All right. Well, that sounds like that's good advice, Andy. Thank you so much for being on with us, folks. This is Andrew Hoffman, CFA, Marketing Director of Miles Franklin. You can find his rants, his blogs on www.milesfranklin.com. Thanks, Andy, for being on with us. We'll look forward to having you on again. Thank you.
You're very welcome. Thank you.